Yep. Today we're going to take a look at an asset that might crash 90% versus silver. Plus we'll do the usual gold and silver live price analysis, maybe something else. Who knows? If you're watching this on the replay, easiest thing is to just use the time codes below. But if you're watching live, you get to enjoy every single thing we do here at Good Morning Stackers with me, Joe Main. But first, in the first 1 minute of the show, what we do is the synchronized slurp. But I'm going to wait for maybe a couple more of you to come in. I think the notification did go out, but maybe it hasn't gone out yet. So what we will do instead is I'm going to talk about my brand partners just before we get into, oh no, people are streaming in now. That's okay. Who am I? I am Joe Main. I've worked in the precious metals industry here in Australia for 11 years, over 3 major bullion dealers. Now I do this show every single weekday morning live. And of course, I help you launch and grow on YouTube and other social media. That's what I do for multiple clients all over the world, actually just mainly Australian based, but all kinds of businesses, not just bullion businesses, all kinds. So hit me up with an email at gmstackers@gmail.com. Send me an email for any other reason too. Want to send me some subscriber show and tell or anything like that? You've got lots of options to send me messages. Keep it clean, people. Keep it clean. And we've got people streaming in right now, so we'll do our shout outs in just a second as I get in focus right here. And today, again, we'll be talking about an asset which will quite possibly, might, crash 90% versus silver. Okay, we'll talk about that. And Live's gold, silver, platinum analysis. Maybe a chart request if we get the time. And I'll show you some happy snaps from my outing over the weekend. I flew all the way over to I flew to the other side of Australia on Saturday, and then I'll show you some of those photos too. You want to see that? Great. But look, now here we go. People are in the first, for today only, in the first 3 minutes of the show, we will do what we call the synchronized slurp. That's where you grab a tasty beverage. I grab my tasty beverage and we slurp it together synchronously. That is what we do here at Good Morning Stackers. It is the honor system. You must slurp it audibly. Here we go. In 3, 2, 1, do it. I've got a new mug today. Normally I have the one with my face on it. Yes, that literally has my face on it. I'll explain that another day. But today I got home from the weekend's adventure and look what someone had made for me. Isn't that cute? Daddy, I think this is going to have to be the one that I use for quite a while actually, potentially, because it's very, very cool. So thank you to my 6-year-old for doing that. Welcome to everyone. It's a new week. Again, use the time codes below. If I'm ranting and raving, that's okay. This is all about the GMS family as well. So hit the big red subscribe button to join the GMS family. We do shout outs and all that kind of stuff. Let me get off there. You don't want to see that email address for the entire time. Of course, the show is brought to you by Perth Bullion Exchange, perthbullion.com.au and Wealthstack, wealthstack.com. You may hear about them a little bit more sometime within the show, but let's do our shout outs, people. That's what it's all about. CT says, GMS Y'all from CT from the Lone Star State in Texas. Have to catch the replay. That's okay. Use the time code, CT. Morning, Joe. Morning, Jason. Morning, Jason. Pete, repeat. GMS. Good morning, Stackers, says the Don. Chris King, up late in the UK. Oh, Chris, I didn't know you were in the UK. There you go. Chris, you're a bit more of a newer person joining, I think. You've been on the live show a few times. Now up late in the UK, but enjoy the show. Well, especially gold, silver, platinum, and oil. Yes, they oil and gold and silver, they track very well together. Love the mug, mate. Thanks, man. I'm working on my skincare. Oh, sorry. Right, okay. The mug, yeah. This old mug, not so much. Not so much. It's getting old and weary. But out of interest, why am I mentioning this now? I'll mention it now very quickly. Again, the paid membership program is coming very soon. That's going to get you all, everyone who joins, exclusive discounts, exclusive permanent discounts from Perth Bullion Exchange, perthbullion.com.au. But you also get a bunch of extra content. And that reminded me about that because there's things I want to talk about, like health and wellness, skincare, diet and lifestyle, my extracurricular activities, and all that sort of stuff is all that exclusive, more little bit spicier kind of content, politically wise as well, is going to be coming very soon. Paid membership, discounts from Perth Bullion Exchange, and all that stuff. That is coming. I know I've been promising it for a while. It's coming really soon. I promise. Maybe this week. Wally Chang, you are traveling. So quickly with Wally Chang. Say hello to Wally, everyone. Hello from Sydney, traveling. So Wally is actually traveling with his son. Has started a big around Australia. Well, not around all of Australia, but it's a kind of up the east coast, down or up the central area, and then back down the east coast. I think it is. I've seen the map, and doing this kind of. It's going to take a bunch of months, I think. And while he's doing it, Wally fired himself a while ago, financially independent, retired early. And then what Wally does is he's doing this thing with his son. He's also putting on conferences about fire. He's doing a fat fire conference. And I'm going to the Melbourne one. And again, Wally, if you want some help, if you want some, anything I can help with, you want me to set up chairs, mate, I'll come along and help you with that. Just let me know. Send me. I've sent you a message, so if you can respond to that when you get some chance, that'd be great. That's Wally. Let's talk about some stuff. Are you ready? Okay. That is the shout outs over. Yes, Wally said doing Sydney, Brisbane, Adelaide, and back to Melbourne, but going down through the central thing, as far as I can tell. All right, people. Let's talk about an asset which could, very likely, crash more than 90% versus silver. Now, this isn't anything controversial or anything like that. Most of you understand this concept, but you might want to share this portion of this video, send this timecode to your normie friends and family. Now, if your normie friends and family are watching this, the normie term is it's a term of endearment. Okay, it's not an offensive term, but we call us crazy stackers. So this is to all the regular people out there. Us stackers, we're a weird bunch, aren't we? I don't even have one on me, I don't think. We collect these silver coins and these gold things and whatever. It's just weird when we talk about it at Christmas parties and things, isn't it? But for the regular people out there watching, we truly believe that silver in particular, gold as well, will be going through a very big, as we'll call it, a capital rotation. Okay, there's periods where precious metals have their time in the sun again versus things like other assets like stocks and real estate and things like that. So I'm going to share a ratio, okay, of a particular asset. Many of you have seen it before, that we think, and many people will think, will crash more than 90% over the next 10 years, roughly. So I'm going to show you what it is as two charts I'm actually going to show you. One is my own little one, and another one is from a subscription service that I subscribe to, which I have mentioned before. I did reach out to them recently and say, hey, can I share a couple of things from the thing? And they have given me permission to do so. So I will do so, and I'll thank them in just a second. Let's show you what's this asset? What's this asset that could crash 90% versus silver? Yep. Sharing the screen, we are talking about the S&P 500. Many of you already understand this. It is obviously one of, the S&P 500, the US stock market index of the top 500 companies, is one of the most popular assets out there in the world. What you're looking at here is the silver to S&P 500 ratio, and then we're going to take a look at we're going to flip it and take a look at the S&P to silver ratio, again provided by these amazing people that I subscribe to. And I'll give them a big plug as well. But this is my chart, okay? Silver versus S&P 500. You can see, and we have talked about it before, but you can see this is on the monthly time frame, and you can see as it's going up, silver is outperforming the stock market. Okay, a lot of people say that, and I do agree, that the predominant asset in the world that's having its time in the sun, if the other things that you're in are not doing better than that thing, then you may as well be in that thing. So for example, when let's see, when the S&P 500 is, then I'll show you, for example, let me go the S&P 500. Do I just have it on the regular? Surely I do. Surely I do. Oh, God, I don't. Oh, no, surely I do. Oh, that's around there somewhere. Anyway, up here. So in silver, this is 2003 to the peak of silver in 2011, at least the peak on this ratio. Okay. So back here, if you were actually in silver between the time of roughly in the early 2000s till 2011, it would have been much better for you to be in silver versus the S&P 500. This is when silver had its big run against the S&P 500. So that was a good trade. Being in silver versus the S&P 500, brilliant move, and congratulations if you did so. However, from 2011 all the way till still around about today-ish, okay, if you had have been only in silver versus the S&P 500, you've seen a massive dip. Okay, again, this is silver versus S&P 500, and then we'll flip it over, okay? It would have been much better for you to be, and this is a lesson. Here's the thing. I was stacking precious metals since 2010. This is a lesson that I didn't learn. And this is a lesson now I wish I had have learned 10, 11, 14 years ago, or whatever it was. If I was following the S&P to silver ratio back then, I might not have actually have been all in silver. I may have, after seeing, this crash below a certain point, maybe in 2013, for example, I may have, knowing what I know now, we don't have time machines and all that, hindsight's 2020, but I may have gone, my silver against the S&P 500 looks like it's continuing down. I may have gone back in, I may have gone into the S&P 500. You've got to be you can't have your blinkers on, okay? The savvy investor, okay, obviously goes where the general tide is, well, I shouldn't say go where the tide is going. We're contrarians, aren't we? Looks at all avenues. It isn't stuck to one particular narrative, okay? Don't be just stuck to the precious metals narrative. But if in 2011 you were in stocks versus silver, okay, stocks highly outperformed silver. Over all this time, looks like it had a rough kind of bottoming in 2018. Obviously, there's that 2020 area. Okay, stocks had a dip. What happened in March of 2020? We all know. Stocks had a dip and silver had a rise because gold was going up. So that's why you saw that move right there. That formed this downtrend line. And since then, we have broken out, but we've just been around this very solid range. And this range has been between that 0.005 to 0.007 level against silver versus SPX ratio. We had a little, it looks like a bottom to me, in March of 2024. Okay, stocks had their real nice little uptick, but silver has been catching up. So the silver to SPX ratio, if for me, this is the final hurdle on the close of any month. If it closes 0.007 or higher on a monthly time frame, that signals to me and to others as well that a capital rotation is happening. And this big move, this move here, we're going to start to tick over and track back up again. Whereas, as this is going up, it's better to be in silver versus the stock market index, okay? One of the most popular investment assets to be in, stock market index, plonk your money in, don't worry about it, and over a long period of time, it generally does go up. Now, that is true. Over long periods of time, it does generally track up, but there are periods where other assets highly outperform it, and silver in particular, and gold as well, gold and silver. I'm rambling now. If they get over their final hurdles, this is silver's final hurdle, could spell a big capital rotation that a lot of people, a lot of big whale investors go, oh, precious metals having their time in the sun again. Let's move a portion of our investment assets in the S&P 500 general stock market. You might see a huge capital rotation back into precious metals. It looks like it's starting right now, okay? So this is my silver to S&P 500 ratio, right? But now we're going to take a look at the opposite, the S&P 500 ratio versus silver, and we can see how it can fall 90% or more. I'm going to share a wonderful, wonderful chart, and these guys are amazing. This is North Star charts. So it's actually North Star and Bad charts. They're two individuals, they're individuals who came together. So one of them was called North Star. This is their, pseudonyms, North Star and Bad charts. They've created a few years ago a website called North Star Bad Charts. You can't see it right here, but you can search for it. And this is their paid subscription service, of which I am a member. I find I align with them a lot on their stuff. So I am being allowed to share this, which is S&P 500, 90% fall versus silver incoming. Let's read it together. Again, this is the paid membership. You can't see this unless you go to their Twitter channel, and they have posted this particular image online, I believe. We often focus on gold versus the SPX being the stock market ratio, but I wanted to take a moment to consider the signal that we get from the relationship between silver and the SPX, again, the S&P 500. This is what they're saying. I find the SPX versus silver chart fascinating. If you plot it on a monthly candle chart with a logarithmic scale, which I love logarithmic scales too, then add the 8-year or 96-month moving average and the Ichimoku cloud, which is something I don't personally use, but I love that these guys use it a lot. And I'm fascinated with it. Okay, I don't use it in my day-to-day, as you know, but it's another indicator, and it's very interesting when they use it. Something jumps off the screen at you. Let's take a look at this baby right here. Okay, let's see how can you see that? Fantastic. How much can you see? Great. S&P 500 versus silver. Let's read all this together. So this goes back, you might not be able to see this. This goes back to, on this left-hand side over here, goes back to the 70s, okay? And so what you can see right here, just above my head, take a look, a 97% drop over 8 years. And this is going between 1972 all the way down to, obviously, the 80s, the early 80s, where silver had that huge peak, all right? So because this is the S&P 500 versus silver, so it's been flipped versus the one you saw before, as this is going down, silver is outperforming the stock market. Got it? Good. As this is rising, silver is having its time in the sun. Okay? So, as this is rising, the S&P 500 is outperforming. Okay? So, since 1980, obviously the crash in silver, etc., you have been seeing the stock market in the early 80s all the way up to, let's go all the way up until 2002, okay, the stock market. So for about 20 years, the stock market, ups and downs, of course, but absolutely dominating, okay, versus precious metals. So let's read this right here. Ichimoku cloud, bullish above it. So when it's above, it's in a bull territory, and bearish when it is below. So it broke back above in, we're talking the early 80s, had a bit of a retest in, again, the early 80s, 83, but since about 1984, look at this, above the Ichimoku cloud right there, and also 8-year moving average, this green line right there, bullish above it. So this is, what this is saying is, when it's above the Ichimoku cloud and the 8-year moving average, the S&P 500 is bullish versus silver, okay? Huge run. Okay, support line here. Went into the Ichimoku cloud, but didn't break below it, okay? Bearish only below, not within it, okay? So all this beautiful move, right? All the way till the early 2000s, we're talking, yeah, roughly 2000, 2001. Then it started to break down, but it wasn't below the Ichimoku cloud and the 8-year moving average. However, when you see, look at this red circle right here, it eventually broke below the Ichimoku cloud and then below the 8-year moving average. And then after it did, it had a bit of a retest, but since then, now you could call it here if you wanted to, but weight of evidence, okay, if you were trading this back then, okay, and if you were using these indicators, you go, okay, it's below the Ichimoku cloud, it's below the 8-year moving average, and now that's my signal. Gee, oh, hey, I wish I had swapped back here, but no, I'm waiting for the weight of evidence. Now I'm going to do it. So if imagine that, imagine here, and then getting into silver at around about, yeah, that early 2000s mark, because you saw it versus the S&P 500. Okay, and again, hindsight's 2020. We're just playing the what if scenario of some random person that got lucky and saw all this, but some people have. Okay, take a look at Mike Maloney, for example. I'm sure he was looking at these ratios back then. Okay, so it is a thing, and this huge move. Now, that's not a 90% drop from the evidence. Okay, that's a 90% drop from the top. Okay, so a 92% drop over 12 years from the top, which most of us aren't going to usually see, okay, to all the way down to the bottom in, of course, 2011, and that's the run. So this going down means silver was outperforming the stock market, and that's the massive run in silver from, wherever it started at to, nearly $50 USD in 2011, okay? So that's that move, and since 2011, what do you know? Back up again. Now, it had the weight of evidence. You could have done it down here. You could have swapped here, sure. But if you're waiting for the weight of evidence, back above the Ichimoku cloud, back above the 8-year moving average. And since then, since 2011 until now. Now, can you see that if I move in? There we go. Yes, you can. I move it over. Can you see that? Yes, you can. So this is where we are right now, okay? We are in, according to North Star bad charts, we are in a bearish rising wedge. You've got the support line right here, which is being broken. Okay, we're not there yet. Okay, we have yet to close below the Ichimoku cloud, and we have yet to close below. Let me see how close I can get this. That's a bit better. Can you see that? There we go. We have yet to close below. We're right on the 8-year moving average. Okay, we're still above the Ichimoku cloud, but we're in this bearish rising wedge according to these guys. Okay, I do find these guys to be very good in terms of their predictive stuff. Okay, but take everything with a grain of salt. This is why they're finding this fascinating. It's the same reason why I find this fascinating. Okay, this is the inverse, right? This looks like it's going for a breakout, particularly when I show you the gold to S&P 500 ratio, okay? This is the gold to S&P 500 ratio, okay? As this is going up, gold is outperforming the S&P 500. You're out of this area right here. Again, these are lines that I've just drawn, so what does it really matter? But I think it's relevant. Again, on the monthly time frame, this is the final hurdle at the 0.5 mark, the halfway mark. Okay, right there, you can see very, very clear level of resistance, very clear level of support and resistance, resistance. I think if you break it and close any month above it, that signals the capital rotation where the big players will be really looking at gold and going, oh, crap. Okay, party's over for my S&P 500 party since, 2011. Looks like gold and precious metals are the place to be again. Time to rotate. And when it rotates, it will rotate, people, okay? And that's why these guys are talking about silver in particular, a potential 90% more drop. If it confirms, probably closing on a monthly time frame, if it close any month below the Ichimoku cloud, wherever that is on this ratio. So if you start seeing it close down in this area, these guys will call it, and I'll probably call it too, because these guys are, not that I'm a copy trade, but the signals line up, okay? For a potential 90% or more move. Now, this is a matching move, 97%. I think they're matching it with this one over here, yes. So back in the early 70s till the 80s, the 97% drop over 8 years, and they're doing the same here. So they're just matching it. Doesn't mean it'll happen exactly, but that's kind of roughly from the top. It's looking bearish, I would say. It's definitely looking bearish. So things are looking very bullish in terms of precious metals versus, the most popular asset out there, the S&P 500. And when the big players wake up and go, ooh, that's interesting, I think I'm going to rotate, then it trickle down economics, I guess if you want to call it that, it trickles down, and then your everyday investor starts eventually catching up to what the big players are doing, And, you know, when every man and his dog is, you know, getting into precious metals, you're going to see that blip, 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 blip. Okay. Now, of course, we should note, and let me go back here. We should note that this is a ratio. Okay. Now, obviously that means, and I'll go back, I'll get your thoughts right now, but this is, take a look at this. Okay. If you want, take a snapshot of this. So if you're watching this on the replay, take a snapshot after the fact, and you can just zoom in and have a look at this. I won't share the actual image because I don't think I was allowed to do that, you know, sharing the PDF or the thing, but you can take a screenshot. I'm sure that's just fine right there. So let's go back, have a talk about it, and then we'll do the rest of the stuff, some other shout outs, etc. So what do you think? I think it's pretty obvious to me. It looks like the capital rotation event is happening. And of course, we'll take a look at the gold to silver ratio, but they always look at the S&P to gold ratio, or gold to S&P ratio, but they took a look at silver specifically because I think, and I think they think too, but I think silver will outperform gold. So if silver is outperforming gold, gold's going through a rotation against the S&P 500, that means it's better to be in silver against the S&P 500 than gold. Okay, and that's why I've been all silver for a long time. I'm just one of those weird stackers, you know, that does that. So if you have shared this with any of your normie friends, hopefully those people watching right now, you can see how things can go through these big ups and downs in terms of ratios against other things. So if you are in the S&P 500 and you love the stock market, hey, that's good for you, and you've done really, really well. We would us stackers would highly ask you to consider at least taking into account the precious metals to stock market ratio. And you can see these times where it's better to be in the stock market, but there are times where it is better to be in precious metals. That's why us crazy stackers have been hounding you, again, at the Christmas parties, at the local barbecue, at the sporting event, at the this and the that, okay? We know what we're talking about a bit, and I think that this weight of evidence proves it, okay? So get out there to your local bullion dealer, Perth Bullion Exchange, if you want free shipping, for example, by over a certain amount. We'll talk about that in a second. But get to your local dealer and maybe just put, 10%, 20% of your investment portfolio into precious metals, you wonderful normie people that you are. Now, we're going to talk to my stackers again. Do you agree with all this? I think you do. Of course, the thing we've got to say is that's a ratio, meaning, hey, the stock market could be crashing and silver could be crashing at the same time. Of course, that could be happening, right, in dollar denominated. Actually, it's just one would be crashing much more than the other. However, what we think and how we think it's going to play out is a complete rotation, okay? The stock market is looking peaky. It's getting there, okay? And it does have periods of retracement. It's due for probably a 50% dollar retracement move coming soonish. This year, next year, it's in the next couple of few years at least. We think the stock market will have its correctionary phase, which it always does. Now, we think, our stackers think, that will correlate with the rotation into precious metals. So if the stock market is going down, it's having its 50% move, which it does over, a year or two period, and that will happen eventually, okay? It always does, it will again. And at the same time, precious metals are having their time in the sun. That's why you can see that 90% drop in the stock market to silver ratio. It's a good time to be in precious metals coming, in my humble opinion. So that's the asset that could crash 90% or more versus silver is the S&P 500. Tony Peterson, great to see you in the house. We'll do some shout outs, etc. We've got Chat Mum. Chat Mum is back. Great to see you. Vanessa GMS, great to see you right there. PB. PB asks, do I buy gold this week or next week? So, I don't know. And nobody who is being honest should be telling you, or they might be honest. They might truly believe what they're saying, but you shouldn't be listening to anyone to say, definitely buy this week or definitely buy next week. Don't listen to YouTubers like me who say, gold's going to explode 20 million% by October. All that stuff. That's all very, very, very clickbaity, okay? The best way to do it, just dollar cost average. Buy some now, get your next paycheck, buy out in your next paycheck, and just average your cost in. If it goes up one week and you've bought, okay, and then it goes down the next week, you've bought there and you've averaged your cost in. So the answer is no one worth their salt should be telling you whether to buy this week or next week. There might be people who go, look, they might believe that certain things are going to happen soon, like, for example, certain meetings, the BRICS nations, things like that, okay, which could propel gold higher, but you just don't know, okay? It is more of a guess. They might be very certain about it, but everyone's just guessing, and I'm just guessing too, okay? We're looking at the weight of evidence, but you know the deal. Just buy when it's right for you. And if this week is better for you because you just got your paycheck and you want to save some of it in precious metals, do it this week. Who cares next week if it's a bit lower? You just buy more if you can. Now, if you're the type of person that you've hoarded all your dry powder, your fiat dollar currency, and you're only looking to buy once, then yeah, you're going to maybe have to play that game, but you shouldn't be listening to anyone else other than yourself. Let's see. Tony Pearson says, the stock market will destroy mortgage-backed securities and 401ks too. Yeah, 401ks is the US version of superannuation here in Australia. Retirement fund. Yeah, good. Crazy like a fox. Oh yeah. Chris Phipps says, I am interested to see the impact when China return from their holiday on Tuesday. Yeah, quite possibly. Yeah, that could be interesting. Now the question is it slammy time or is it pumpy time? Precious metals is the bank of you. Yep, absolutely. As I've said millions of times before to 1,000+ customers over my time when I've worked in the precious metals industry, if nothing else, precious metals are a great saving tool. If it doesn't make you ultra rich, it at least helps you save money because it stops you from spending frivolously, okay? Because you've got to take the actual physical thing. I've got to take the physical thing, take the thing, do the transaction, go on the train, drive in, parking, all that thing. So it's a very good layer of friction between you and your wealth. So no frivolous spending. You've got to really want that thing to go in and swap your precious metals for fiat currency and then get that thing that you want. Cool? It makes you second guess yourself, which is a good thing. Okay. Let's do some quick live gold, silver, and platinum price analysis. Maybe the gold to silver ratio too, and then we'll get out of here because and I've got to share some photos too. And of course, don't click that time code. Why would I do that time code? Of course, first got to know about Perth Bullion Exchange, perthbullion.com.au, my preferred physical bullion dealer, Australia's first dealer to offer free shipping on all discount volumes. You buy over a certain amount, you get free shipping. Never heard of in Australia before. You know the deal. All my subscribers do. But if you're watching my show for the first time and you live in Australia and you have not purchased from Perth Bullion Exchange, obviously in Western Australia, you get free shipping when you buy over a certain amount. If you buy 20 of these babies right here, instant free shipping, Australia-wide, free shipping, sign-on delivery, express, fully insured, all the normal stuff you get from every other bullion dealer, except it's free because, hey, you bought in bulk. Why should you not get free shipping when you buy in bulk? Of course you should. Every other bullion dealer in Australia will step up to the plate at some point. Perth Bullion Exchange are the Mavericks. They're the first one to do it. They've gone, we're putting our feet in the fire. We're going to be the first ones to do it. It's crazy. And here's the thing. You don't even need to buy 20 of those. You could buy one of these and 19 of any other thing. Could be something cheaper, could be something more. You want some gold, you want some silver, you want to mix and match, it doesn't matter. If you have 20 or more of anything in your shopping cart, so a mix and match, 3 of this, 4 of that, as long as it equals 20 in your shopping cart, instant free shipping. It's mental. It's so mentally good. It's great. It's good for your mental well-being to know, A, that you're getting great premiums, great prices from Perth Bullion Exchange. You also get the discount if you buy over a certain amount as well, and free shipping. Like, most people have to factor that in. I was like, what did I pay per ounce? was like, oh, I've got to factor in shipping too. So if I factor in shipping, then I divide it by the amount of things. I actually paid a little bit more per ounce. Nope, you buy it in bulk, you get your free shipping. You don't have to worry about that calculation. Anyway, that's Perth Bullion Exchange, perthbullion.com.au. And this is Wealthstack, wealthstack.com. They are still in maintenance mode. I think they're coming out of maintenance mode today at some point. Bear in mind, they are based in WA, so that might take, a couple more hours for the East Coast. This is wealthstack.com. Save and invest in real physical gold held for you by Wealthstack, by one of the world's largest gold storage facilities. Okay, LBMA registered. The company, wealthstack.com, fully Australian regulated, Australian company, etc. Okay, but they're just adding some new things. They're implemented a cleaner verification process, added new several steps to enhance security. When we'll be live again, we anticipate having Wealthstack fully operational with all functionalities restored by Monday, October the 7th. The timeline depends on the app stores, okay? Because every time you do an update, the iPhone and Android app stores have to approve it again. But this is Wealthstack, wealthstack.com. Go check them out. It is fantastic, okay? Go to download it. So you download it on iPhone or Android right here, okay? It's a phone app, but it's also a desktop app, a desktop version as well. So you can just type, log in, sign up, etc. You're buying real physical metal held for you, okay? So it's an unallocated gold program, no storage fees, no transfer fees if you're transferring between Wealthstack account members. You're buying gold for spot plus 1% only. Spot plus 1%. Sell for spot minus 0.5%. What is going on out there? You can hear that noise? My kid's doing something. Spot plus 1% to buy, sell for spot minus 0.5%. The spreads are very good. What is coming is silver is coming towards the end of the year. Platinum is probably coming too towards the end of the year. They're a pretty brand new company. Okay, they reached out to me to get to the stackers community first because they want to get your trust. Okay, and if you don't want to do it, that's fine, because if you only like holding physical in your hands, great. Tell your normie friends about Wealthstack, wealthstack.com. Get them to download it on iPhone or Android, or sign up on the desktop app. Okay, and a debit card is coming. You can pay for your stuff anywhere that accepts Visa or MasterCard with gold or silver or whatever. And also physical redemption is coming. So this could be good for you. You want cheap fees, etc., cheap way to get into gold, and then redeem for physical later on. Okay, sign up for a Wealthstack app, for the Wealthstack app, and go to wealthstack.com. Go all the way down to the bottom left-hand corner. That's just right where my head is. Click on the FAQ section, read the frequently asked questions. You'll find out all about it. It is an excellent app, which I'm happy to put my faith, my name behind. Okay, that is Wealthstack and Perth Bullion Exchange, my brand partners. Now you've hit the time code for gold, silver, and platinum price analysis, maybe the gold to silver ratio very quickly, and then we shall get out of here. We'll answer a few more of your questions, do some shout outs at the end, and do a synchronized slurp, and that's it. But let's take a look at the price of gold, silver, and platinum. Let's take a look at gold. Sharing the screen, my funky, funky people. Here we are. Here is gold on the monthly time frame, price in USD. Take a look at the monthly, okay? I keep saying, and I will harp on it, okay? 2,650 US dollars. We have room to move. As I said, we've got room to move up to this 2875 to 3,000 US dollar level in the next couple of months. That can absolutely happen. Nothing saying that it can't. The only thing I'm saying is from here, and I will harp on it till the cows come home, from about here until about here. It's a big range, $350 range. It's starting to look peaky from here. That's all I'm saying, okay? I'm not saying it's crashing tomorrow or today. I'm not saying it's pumping today and tomorrow. I'm saying from here, just looking peaky, with the room to move to that max, probably $3,000 level before we see a retracement. Get it? Got it? Good. Why? On the monthly time frame, we're already in extremely overbought, extremely overvalued right here. You don't spend a whole bunch of time here. Again, there's room to move over a couple of months, but that will peak at some point. Whether it's here Whether it's now or whether it's in a couple of months' time and it starts peaking here. Maybe we go a little bit higher. Maybe we come up to match here. I don't bloody know, and neither do you. But we're in the general vicinity. Okay, yeah, look, there's room to move higher. Okay, you can match this area from back in August of 2020. You can match that and then tick over. That gives it room to move to $28.75 to $3,000 level. Okay, but don't be surprised. That's all I'm saying. Don't be surprised and shocked and dismayed if it does peak around here and come down. Okay, let's take a look at the daily though. On the daily, what gives me pause to think that, we are back below. Am I on the logarithmic? Yes, I am. So we closed last week just at the mother of all trend lines. The mother of all trend lines being the one that goes back all the way to 1980 through the highs of, vertigo. You're getting motion sickness? Mother of all trend lines, you know it, you've seen it right there. Mother of all trend lines, 1980, 2011, and we're right there right now. Thank you for your patience. You can see very clearly that, hang on a second, that changed on me. Why did that change on me? That was weird. Okay, let me go back. Yeah, no, and there's the daily. Oh, okay, the daily, we're above it. Okay. Sorry, it looked like we were below. We are currently above. We're still above the mother of all trend lines. So that's good. Okay, so that gives pause. Maybe, we can see that pump to that 28.75 to 3,000 level. However, on the daily time frame, I don't like the fact that we've been extremely overvalued already, and it looks like we may be ticking over. That doesn't signal to me pumpy. It signals to me more downwards. But however, we're above the mother of all trend lines, so that's good. So I'll remain kind of neutral. Definitely going down or definitely going up from here, 50-50 chance. Sorry, I'm not that guy to be Mr. Pumpy or Mr. Doom and Gloom. You know that. So if we start closing days below the mother of all trend lines, going back to 1980, then I'm going to say, looking really likely that we see a retracement to at least around about 2,570 to 2,560 US dollars. You would want to see that hold as support. If that doesn't hold as support, then probably, I would say almost, certain that we head down to maybe my best buy zone. And that's anywhere down to 2,250 to 2,150. It would just be a very big setup if we crash down here, okay? I guess bearing in mind, I still do have my upper line in the sand of 2,470, so maybe we'll keep that there, okay? But we're above the mother of all trend lines. Okay, that's cool. It's just peaky from now. That's really all you need to know for gold. Nothing's really changed in gold since last week. Silver. We closed last week at a new little interim high. Last week, we closed above that 32.50 level. Okay, so they hit 32.50 that was May of this year, and then we spiked. Now, what do we say about spikes though? We spiked at nearly 33 US dollars. But what do we say about spikes? The spikes are not important. The closes are important. Okay, so we did close below the 32.50 area, and we've opened. We're at $32.25. What is that? 25 US cents. Now, here's the good news. We're still above the final hurdle of 31 US dollars. So far, so good. Silver looks set up for the moment, for October and maybe this quarter, so the next 3 months, for a nice run. It's set up for a nice run here, okay? It's looking good so far. And that's why I think the gold to silver ratio will continue to drop. We'll show you that in just a second. So gold is looking peaky. Silver isn't looking peaky. We've got room to move. We're not in extremely overvalued just yet on the monthly time frame. It's got room to sail up versus gold, okay? My top is between $37 to $40 for 2024. I'm sticking with that. We could get to the all-time high. I don't think that's happening this year. Could be completely wrong, okay? Many of you disagree, and that's okay. I will be happy to be wrong. Watch out for $38.50 as a key Fibonacci level that we may find some resistance at in the next few months if we do rocket up from here. Cool? What negates all this? Closing below 31 US dollars, not good sign, people. That would say probably coming back down to the best buy zone area, which potentially, well, you'd have to watch out for the new line in the sand of 29.80, but If you start closing below 31, this becomes a higher percentage chance. That's the 28 to 26 level. We're nowhere near there right now, so it's looking great guns for silver at the moment. So looking great for silver. That's the positive. Above 31, opened the month really well. We made a little spike. We just need to get back over that really quick smart, please. We don't want to start hovering around this kind of price for too long. We want to see that pump happen really quickly, okay? But it's looking good. Cool, that's all you really need to know for silver. Looking good so far. Let's do the gold to silver ratio now, and then we'll go to platinum. So I've shown you gold, shown you silver. Gold to silver ratio does give me pause at the moment to think we are going to continue. Could be wrong, but so far it's outperforming gold. We're back. We closed just above, I think it was. Let's look on the daily time frame. No, on the daily, technically, we closed below this trend line. That's good for silver. Look at this on the relative strength index. On the daily time frame, as this is going down, silver is outperforming gold. As silver holders, that's what you want to see, okay? That has gone, that is broken right there as well. I'm very confident, and I could be completely wrong, but I'm going to say, we haven't done it yet. I'm going to say I'm 80% confident that we are going to see at least a test and probably a break of the 80.5 area. That is the signal to me that silver will continue its longer term outperformingness, technical term, against gold, okay? Dropping the ratio from 80 something, probably all the way down to at least 50 in the coming, year or so, 2 years, something like that, okay? We just need to confirm a close below 80.5 for me, the bottom end of this purple box, right? Below here confirms long-term silver dominance, okay? Look at the way that's trending. That's looking pretty good, okay? That's on the daily. If we take a look on the weekly, look at the weekly relative strength index trending down. It's not above any kind of areas, okay? You could see a little pump from here. This week could be, see the gold pump higher than silver, okay? But the trend seems to be going down on the monthly time frame. Look at that longer term trend on the monthly. Blip, 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 blip. We haven't broken above here, okay? So there's no reversal saying that's happening. Silver is looking good for a move. Now, we did have that little blip along the way, but look at this. We're talking about the longer term, right? This is the longer term from when we went to 1 to 125. That's a very steady downtrend with little blips, okay? Little blips along the way. I think we're looking good for silver. I could be completely wrong, or I will stick with my biases, okay? On the opposite end of that, gold bugs could say, you are wrong, Joe, because look, you're coming down to a support level. You touched the top end of this rectangular box right here. That's a support level, Joe. So we think it's going to go blah, blah. Yeah, it could do that. But I'm going to remain, while we're below this trend line, I'm going to remain bullish for silver against gold. That's my personal, completely confirmation biased opinion, okay? I want it to be true, so therefore I think it is. That's pretty much how we make decisions in the world, don't we? So that is the gold to silver ratio. Looking good for me for a move. We just need to confirm that 80.5 break. And if we start breaking below, great news for silver holders. Quickly for platinum. Again, just like Lucy and the football with Charlie, it's continuing to do it to me. We have failed so far to break out of the February of 2021 downtrend line. We're back above, as I said, the thicker yellow line, which is the trend line that goes all the way back to February of 2008. So we're above there. Good sign. We're not yet above the February 2021 trend line. That's the ultimate, not the ultimate, that is the getting excited line. We've flirted with it over the last couple of weeks, and it, boop, 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 boop. This is what platinum does to me, as you know. It's my fickle mistress. Okay, so I'm in cautiously excited mode in this area. When we break out of here, I'll be getting excited, as you know, and we'll talk about higher prices from there. If we start breaking below into this area, okay, I will be then depressed for platinum once again. That's all you need to know. So I'm kind of like in a ho-hum, okay, cautiously optimistic, cautiously excited area for platinum. That's really it. Until we break above here, I'm not excited for platinum. I'm cautiously excited. Cool? Got it. yeah, that's it. Watch out for 1,115 if you're a new subscriber. Watch out for 1,115 as my final hurdle. That tells me we're in full bull. We're nowhere near there yet. We're just in this kind of trading range. Somewhat positive above there. Just don't do it to me again, Lucy. That's all I ask you. Let me kick the ball this time. That's platinum, gold, silver ratio, platinum. That's it, people. Final comments, and then we shall get out of here. No chart requests today. I've got things to do. Oh, and I was going to show you very quickly. I was going to show you. Hang on a sec. Let me show you. For the people who have stuck around to the end, well done. All 22 of you still watching. You get to see what I got up to last week. No, over the weekend. You want to see what I got up to over the weekend? Let me share the screen. Sorry, that's going to be annoying. Here we go. Let's share the screen. Who's this? That's me. That's me right there. So, as you know, I'm in a U2 tribute band as a Bono. Yep. This is my band. The band I've been in since... The band has been around for 20 years. Australia's leading U2 tribute for 20 years. Literally started 20 years ago. I joined them about 5 years ago as their Bono. And we're doing great guns. So I just want to show you, this is the show we did. I went to Perth on the weekend. So this is really cool. You want to see this? So it was a really great night. We played at the Rosemount Hotel. We're going back there next year, in October next year, back to the Rosemount. I'll show you, take a look at the crowd. It was just ridiculous. Look at that crowd. So it was nearly 400 people, die-hard U2 fans, just having a good old time. And I'll show you some of the other photos as well. You want to see some? That's my band. That's me doing the thing right there. I think there's a better close-up of me. There's one right there. That's us doing our thing. Great light show, great sound guy, great venue. It was a really good venue. And that's me as Bono. Yep, that's me doing my thing. So was that it? Yeah, and the crowd. So there you go. That's my band, or the band I'm in, the U2 Show Achtung Baby. We are going to be in Melbourne again. We've got, let's see, there's Sydney, and in 2 weeks' time, we're going to be in Sydney and Canberra. So if you want to find out more about that, the easiest thing, if you want to see me act like pretend to be a rock star somewhere near you in Australia, just seriously follow this page, the U2 Show Achtung Baby. Just type that in. You can see what it looks like there. Find it and follow it, or like it or follow it, whatever you do on Facebook. We have nearly 7,500 followers. Right there. So follow us, and then you'll find out where I'm going to be playing somewhere. So I'll be Sydney, Canberra 2 weeks from now. We're going up to Queensland the following week. Then we're in Melbourne in early November. We're doing a show. So we're all around Australia. So check us out, people. That's what I do as my extracurricular activity. It's what pays part of my bills, and sometimes it pays a lot of my bills. So over the last 25 years or so is what I do. I'm really peeking out here on the lighting. Final comments, and then we'll get out of here. Wealth staying up for. Thanks, Chris King. Thank you so much. What is going on with that light? 1 second. That's better. All right. Worth staying up for. Thank you, mate. Tony Peterson says, Schrodinger's cat. Yes, you're always right until you're proven wrong. Yeah, exactly right. Outperformingness. That is my technical term. Outperformingness. Tony Peterson says, the metal value is around FV. You can't lose any future scenario. It can be used to make change. Okay, you're talking about something else between yourself. That's okay. Okay. Comments. Mark Florida, great to see you. Been a bit busy, so I missed out my life story, Miss Tony. 1960 cent round. Yep, daylight saving started this morning. Yeah, it certainly did. Let's see. Oh, Tony Pearson said, recently I've started stacking blocks of $10 and $5 notes and rolls of 50 cents. Oh, yes. Due to the metal value. Now, blocks of $10, $5 notes. Why? What? You're stacking blocks of $10 and $5 notes. Why would you be stacking $10 and $5 notes? Out of interest. Why are you stacking the old fiat currency? And rolls of 50 cents. Now, rolls of 50 cents, yes, because of their metal value. Because they are, yes, they are, where are we? Base metal. The base metal, yes, because cash is king, yes. Because the base metals are 75% copper. That's right, and 25% nickel. That's right, 75% copper, 25% nickel. That's right, a 50-cent coin. I've got I won't show you here, it's a little bit heavy. Over the years, I've also been stacking 50-cent pieces, 20-cent and 10-cent pieces. Probably I should just stick with the 50s and the 20s. But yeah, they have 75% copper in them. What happens What happens when the price of copper goes up to a certain point where it's better. You can hold the cash, the coins, and you're getting some fair value for them in terms of copper. Okay, what happens when that happens? Which it has. Obviously, the 1966 50-cent round went out of circulation because silver went up so much that there was more value in the coin than it was. You know what I mean? That same thing could happen for your literal 50-cent piece, the hexagonal one. So that's it. Let's see. Final comments. Mental note to self. GMS starts at 8:30 a.m. for your Queenslanders. I didn't realize that until just now. Hey, so it's more of a morning show for you Queenslanders. Yes, daylight savings did start in parts of the east coast of Australia. So yes, so it's much more of a morning show for you guys. GMS, well, DST caught me out. Daylight savings caught you out. That's why there weren't as many people. I should have figured when the show started. All right. That's it, people. Anything else? My thoughts on the market concur with Joe. We often concur, don't we? Do you concur? I concur. I think that's it, people. Yeah, we're going to get out of here. That has been Good Morning Stackers for Monday, the 7th of October. Ooh, October the 7th. Yee. Watch out around here. Watch out for things going on in the world, potentially. October the 7th. Oof. That is it, people. Well, we're going to get out of here. Again, send me an email at gmstackers@gmail.com, gmstackers@gmail.com for anything you want to share. If you have subscriber show and tell, send me a screenshot of your stack, whatever it is, you do that and we have a great time. I will see you tomorrow. But this has been... Let's dance it out, people. Grab your tasty beverages because this has been...
Good morning, Stack. Oh yeah, we're feeling fine.
I did a whole hour with...
Good morning, Stack. It's podcast time.
Okay, grab it.
Grab a tasty beverage. Let's get in the groove.
Let's do the...
Synchronized slurp.
Yeah.
Now we're on the
In
move.
3, 2, 1.
Good morning, Stack.
Oh yeah, we're feeling
Ooh, I needed that. Stay safe, stay informed. Hopefully see you tomorrow live. Probably will. Have a great day. Keep stacking. See you then.